What's up, fam? Hey, for all my sharks out there, man, I came on today just to talk to y'all for a brief moment, man. I got content getting ready to be released, and you know it'll be out here hitting the streets in the next couple of days. But what I wanted to talk to y'all about today is what I've seen in the market and what a lot of y'all are experiencing right now. And you know, some may be on stock euphoria, and some may be like, man, I'm just not recovering what I lost. And either way it go, I'm proud of all of y'all, because if you stayed in the game like I talked to you about, by buying the dip and being in on plays that you only truly believe in with your shark mentality, we're going to take advantage of this market. But we got to talk about a few things, right? I want to make sure that you're set up for success going forward and what's going to happen with this market, because there's a lot of things to be determined. So let's get directly into that first, but let's talk about what happened with the market today. Well, you will see that the NASDAQ was up almost 4% today, and then you will see that the S&P 500 was up almost 1.5% on the day. Then the Dow Jones pretty much ended up flat on the day, so we're not gonna really get into what's going on with the Dow Jones. But let's talk about some of the best performing stocks in my portfolio today, and one of those is Tesla. Tesla's up 22% on the day, which is amazing and crazy at the same time, because as big of a stock that this is and having big of a market cap for it to be moving at a 22% clip at the end of the day, is bananas to me. So I hope that's bananas to y'all, and y'all paying attention to what's going on out here. And then I added NEO during the last market corrections days that we've had to my portfolio in the private account, and I'm up 20% on that position already today. It bounced back with a 20% day already. And then I added to my position EXPI holdings in the private portfolio as well, and that performed at 12.5% today too. Now look, I do have other positions in the portfolio that I'm not ready to reveal just yet in the private stock account, due to the fact, man, your favorite content creators are not out here banging with these stocks, talking to y'all about these stocks. So it's only right that I validate the content by bringing it out on the channel first, and not putting it out here in a video where people can go and run off and say, hey, did you know about this stock? Hey, did you know about this stock? Can you do a video on this stock? No, I already have those plays in the bag, and I'm gonna bring them to y'all. So this is why you gotta stay locked into the channel, and this is why I need y'all hitting that subscribe button, hitting that notification bell, so you can be in on the plays like me. And man, you know, let's get directly into what I think about what's going on in this market right now, man. Look, I wanna talk to y'all about what I see going on in the market. And I wanted to have questions that I had to write down so I can make sure I brought them to y'all the right way, right? And one of those things was the market up for a reason today, right? What was the reason when you think about it what's going on in the market? What news did you see broke today that made the market run up like it did today? And if you didn't see any news, or you didn't hear any news that made you go, the market is going to take off today, that should make you pause for a second. And then, was this just a bull trap? So for my players out there, my sharks out there who don't understand what a bull trap is, right? Because you're new to the game. A bull trap is basically where we see all these bad corrective days in the market where everything's been red, just red on top of red and more red on top of red. And then the market sends you a signal, a green day. You might have another red day, but then it's another green day, and it's like, like we about to tick back up. And then it's another drop off of another 10% and another market correction. And all the gains that you put into the market because you start buying on those green days again, you get caught in the bull trap. That's what that's called, when the bears take advantage of you and you are out to slaughter. So is this a bull trap? Possibly. We don't really know just yet. We need more data. We need to get more data to understand what's going on. So this is another topic that I had in my head, right? So now, what changed the trajectory of the stock market today? What catalyst? Well, I mean, there was a stock market catalyst when it came to the stimulus news being broke this weekend, because a lot of people didn't anticipate that to happen until later on this week, where the Senate was going to pass the bill. But they passed it over the weekend, and now it's back in the House, and the House is more likely inclined to pass a vote tomorrow on the stimulus bill, where the president signed it back weeks in. But I don't think, in my opinion, that was a big enough catalyst to run the NASDAQ, the tech sector, up 4%, and then send the S&P 500 up almost 1.5%. I don't think that at all. Yeah, it would have made a nice little bounce in the market, but the bounce that we saw today was strongly significant in nature. So we need to understand why, and you need to understand why this happened in the market. All right, so let's talk about the bull trap, right? This could be a bull trap. And if it is a bull trap, this is how you need to play it, right? You got to be careful about what's going on in the market. You got to be a little bit more weary about how you're spending your cash and how you're strengthening your portfolio and how you're buying on the dips. Now, what we always talk about on this channel is having true conviction in what you're putting in your portfolio, because usually what we're putting in our portfolio, if you're a long-term investor like me, that you're riding out with stocks for 2 to 3 years, and those 2 to 3 year stocks are going to make you significant gains over a period of time, but you got to be loyal to what you got in the market. And you also got to make sure that you have your buying the dip money ready to go, so you could take advantage of the market when you need everybody else is out there looking for a tourniquet when there's blood in the water, okay? So we already talked about the stimulus news. We already talked about the bull market, the bull trap in the market right now. And then let's talk about what I really think happened today though. What I believe, in my opinion, that happened today was institutional investors started looking at the rotation of plays. A lot of them was moving into the recovery plays because there's a lot of talk about the pandemic and the vaccinations working and how herd immunity is going to happen later on in the year. And we still have states like California get ready to open back up. And that takes a lot of turn in the market sometimes, where you want to get into these rotational plays, secular plays, where you could take advantage of the market for institutional investors though. But I think what happened today was institutional investors looked at the market and they realized, Tesla under 600? That's pretty cheap. I need to go get that. NIO, under 70? I need to get that too. I can buy that at 30. So your examples like this is what I think what you're seeing what happened in the market. Yeah, we have the outliers like the GameStop and AMCs and the Reddit stocks and things of that sort for red Wall Street bets. But at the end of the day, you still got to look at the valuations that the tech sector has, because these sectors, this sector alone is going to be here in the next 10 years or so. The mass majority of those stocks that's trading in the NASDAQ right now are still going to be plays that you're going to be in 10 years from now. And so institutional investors are like, we need to reward our investors. We need to go ahead and get these investments right now in these tech stocks because they're so cheap. And we're going to look like we was geniuses when it came to this. So there was a lot of money moving in an influx into these particular plays, especially like Tesla alone. So when you're telling me with Teslas, they got a lot of buying power at 22% on the day, that tells me a lot of heavy money was in the market today. Now, how are we playing this though? You should be strengthening all of your red positions in your portfolio. That means that you're scrolling over, you're looking at your cost basis per share, and you're seeing, hey, it's red. To me, anytime that there's a red day in this market recovery correction, you need to be strengthening that position by adding more shares to it if you have cash on the sideline. This is the perfect opportunity to make sure that you're strengthening your portfolio and you're evaluating the stocks in your portfolio if they're really the ones that you're ready to ride out with. If you had no more money and you had to let the stock ride for another 10 years and it's in your portfolio, would that stock give you the significant gains that you want in your portfolio? And if it's not, it may need to be under consideration for being removed and adding a stronger position, Shark. I mean, I gotta be honest with you. You can't be out here floundering in the water and have no backup plan. So if your backup plan is to believe a stock is gonna bounce because everybody else is out there recommending hot stocks to you, think about it like this. Did you believe in that play when you bought that play? Did you do your homework on that play when you got into that play? And if you did those things, are you willing to buy the dip if that stock was to actually bounce another 10%? This is what you have to think about right now, because the market that we're in, we can easily be in another market correction for another 45 to 90 days. And if we are, you're gonna have to be loyal to yourself and just keep buying the dip every time you get paid. This is what you're gonna need to get through this right now. So don't think that the market is ready to give in to you or ready for the market to take advantage of you. You need to be ready to take advantage of the market. And the only way you're gonna do that is being locked in like a shark. Because when everybody else is running for the hill, this is when we strike, when it's blood in the water. So let's just talk about an example of what I'm talking about to you today. I have Tesla in the portfolio, and I have a significant amount of Tesla in the portfolio. But in today's time, man, I was looking at the prices of what Tesla was evaluated at. When it was hitting sevens, I wouldn't buy. When it was hitting 650, I wouldn't buy. But I was telling you, If you don't have a position in Tesla, this is a perfect time that you should be that I'm recommending to you that you should be adding to your position or starting a position. But I couldn't buy at that time because it was like, one, I needed the cash to load up. But then two, I wanted to make sure that I was getting a better equitable price than what a lot of y'all was gonna get in at, because I was recommending Tesla under the sixes too. And man, it slipped back down to 589. It slipped into the 575, 589 range. This was time for me to load up again. Time for me to load up on Tesla, because now I'm strengthening my position and it's not moving my cost basis too much. I'm staying right where I want to stay at, building it in. And then I'm advising myself, hey, look, as I keep on adding to this position, I'm buying at a stock price per share at that point in time where I can easily see it doubling from. See, when I see it in the sixes and when I see it in the sevens, I can't buy it at that price right now because look, I'm looking at it. How long is it going to take for me to see that the double? When I'm thinking long term, I'm thinking about every time I put money in on a play that it's going to double. And right now, with me buying Tesla in the fives, I can easily see it hitting $1,200 by the end of the year. Maybe even more than that, because usually my price target on Tesla is a little bit under. I'm a little bit more conservative than what the analysts are and what Tesla actually responds with. So that's just an example of what I think is going on in the market. Now, this is what I'm just letting you know is that you got to be paying attention. Don't get caught up in the futures. Don't get caught up in the treasury yields. Don't get caught up in this inflation talk. You got to play the game the way you know how to play the game. Advise yourself on, look, if this happens right here with this stock, I'm going to not sell this stock for this reason. And when you do that, you're putting yourself in a better position. Matter of fact, do yourself a favor. Go to your calendar on your smartphone. Put in the stocks that you don't want to sell. You put the stock symbol in there, and at the end of it, we're going to put HODL. And then what you're going to do, you're going to put the date for next year, this time frame, if those are stocks that you're going to ride with. We're going to go 1 year out, and then we're going to revisit this situation, and we're going to talk about, hey, how did you do in that 1 year time frame? So look, man, I always tell y'all, I'm here for y'all. I'm here to help build y'all sharp mentality, and I'm always gonna be down for y'all. So this is what you gotta do. You gotta subscribe to the channel. You gotta hit that notification bell so you can get fire content like this from me all the time. And you need to stay tuned, because later on this week, man, I'm gonna drop some new fire content on you on big plays that I see coming down the future in the pipe for March 2021. So hey, I hope that y'all know how I feel about y'all. I love y'all. Stay safe. Peace.